Thank you for joining us today.
Hi Milan, good to be here.
Perfect. So for our viewers, I would like to start with a brief introduction. So Rahul Singh is a seasoned investment professional with more than 27 years of experience. He currently serves as a Chief Investment Officer Equities at Tata Mutual Fund, where he oversees fund management as well as equity research. Rahul has strong foundations in, on the technology side as well as, in business. He's an alumnus of IIT Bombay and IIM Lucknow. So with that, in context, Rahul, let's get started with some basic questions and also discuss about the upcoming NFO of Tata Nifty 500 Manufacturing 50-30-20 Index Fund.
Yeah. So I think this is a fund which has been designed, the index has been designed keeping in mind the emerging manufacturing potential and the growth potential which the sector as a whole is offering. And, we felt that an index which is wide in its representation across manufacturing sectors and also having adequate representation from large cap, mid cap, small cap, would be able to capture this theme perfectly rather than having only a large cap dominated, which is why this 50-30-20 is. And our view is that it's a multi-year kind of a growth opportunity for India as a country, and the best way to capture it is through a broader index and not necessarily a very narrow index.
Got it. Now, if you take a case of PLI schemes, so they have been successful in especially in the electronic sectors. So, do you see a similar potential for growth in other manufacturing subsectors, which the index includes, and if so, which specifically any particular sector that you could see benefit from it?
Yeah, actually, it's a good question, and I think PLI, although is the most talked about kind of term or the scheme which government has announced, and it is turning out to be reasonably successful, is just a small part of what is going on, generally speaking, in the whole manufacturing sector and the whole global supply chain logistics. Uh, so just to give you a context, I think we had a Make in India program even starting 2015, but we did not make big headway in getting good quality FDI investments into the country for manufacturing as a sector. So what has happened is that post COVID and post the geopolitical tensions which have increased, given the Russia-Ukraine situation also, I think generally the countries which were over dependent on China as an exporting country, or for mainly for manufacturing and other intermediate kind of products, including chemicals, I think they want to develop alternate source for those goods across the world, and there is nothing better. I mean, there are obviously options like China, so like Vietnam, Taiwan, and Mexico, maybe in terms of proximity to certain developed markets. But India offers a good mix of a strong domestic market or a big domestic market. At the same time, the government has become more investment friendly over the years. So essentially, what you're seeing, PLI is a very small part of the global movement, which is seems to be emerging towards promoting India as an alternate to China. Obviously, it will take us maybe 10, 15, 20 years to even come close to where China is today. So therefore, as I said, this is a multi-year kind of a trend. What we are seeing is just the beginning of it. And manufacturing is therefore very wide. So one is the PLI part and the export part. But you are also seeing some kind of a renaissance in manufacturing in the capital goods industrial space, where we always had companies which were capable in terms of engineering capability, but we did not have the scale to match up to China. So what PLI does is to give us a little bit of incentives for those 3-5 years till we build a scale. But not all sectors are getting PLI. Some sectors are generally, so a lot of companies, when we meet, we are seeing companies genuinely benefiting from this export demand, with or without PLI.
Got it. And as you mentioned, India does have an aim to compete, China as a manufacturing hub. So apart from PLI, which other factors are contributing or supporting this, as well as which, 2 or 3 factors that you see as potential challenges to that?
Yeah, I think the factors which are contributing to that is, as I mentioned, the fact that we are a reasonably big domestic market as well. So any MNC who wants to, let's say Apple or any mobile manufacturing company or even an engineering goods company, a lot of MNC companies which have subsidiaries in India are now planning to invest into capacities more towards the export markets. So they want to make India as a hub for exporting goods from here. So it is not; those are the kind of investments which are not really dependent on PLI. Those are independent strategic decisions being taken by the multinational companies which have been operating in India for a very long time. So therefore, that's the other factor which is working in favor. That geopolitically, we are in the sweet spot essentially. In terms of risks, I think the major risk factor is that we have inefficiencies in our logistics and transport and logistics market. We have inefficiencies in our land laws. I think those are the inefficiencies which are the risk, and hopefully they don't become big enough to hinder what seems like a multi-year opportunity or multi-decade opportunity. But I would say that that is one risk. Those are the couple of risks which I can think of which can slow this down. I don't think this kind of a trend can be disrupted so easily or can be completely stopped, but it can be definitely slower if these risk factors are not handled properly.
Got it. And your presentation, NFO presentation mentions that there are combined factors that are supporting manufacturing growth in India. So among these factors, which do you think are top 3 factors apart from a large domestic market? Which inherent factors are contributing to this growth?
So we have let's say some of the other sectors where we are seeing manufacturing kind of revival is in the renewable space, in the EV space. We are also seeing some revival in the energy transition space. So a lot of companies are going through the energy transition from their old fossil fuel led generation to the new green energy kind of initiative. So that is also leading to additional manufacturing capacities and manufacturing kind of investment cycle revival. Then there is another cycle which is driven by increase in competition. I mean, a lot of sectors we have had new entrants. They are setting up new capacities. So that's the other leg. And the third leg I would like to highlight is that even in the power transmission and power generation, the more traditional uh, power generation and transmission side, also we are seeing a scenario where there is energy shortage or power shortage in the country. So that is leading to investments in the power sector also. Power sector or anything which is supplying to the power sector, any ancillary sector or any power equipment sector which is supplying to either power generation or power transmission as a theme.
Got it. Now, if you see the manufacturing sector is sensitive to commodity prices or supply chain issues. So how does the index's multi-cap approach as well as inclusion of various manufacturing subsectors helps to mitigate this risk to a certain extent?
Yeah, I mean, as I mentioned, there are various drivers for demand across the manufacturing sectors. Like I just mentioned, there is renewable, there is power, there is energy transition, there is PLI. Yeah, there is, there are capital goods and engineering companies which are setting up India as an exporting hub. So there are 4 or 5 or 6 kind of drivers of this manufacturing growth. And if we don't have a broad enough index we will not be able to capture all parts of the growth potential. And therefore, we have this approach where we try and maximize the participation through this index, which has 50% large cap, 30% mid cap, and 20% small cap as a rule based allocation in these market capitalizations, so that we are able to capture large, big, small companies. Also, the mid and small cap segments will offer potential to enter into areas which can be much higher growth from a manufacturing perspective. So that's why I think it's a good balanced mix. The good part about this kind of an index would be that it will provide you a good mix of large, mid, and small. It will provide you a good mix of good variety of sectors. So hopefully that is something which will show up in terms of the performance also.
Right, interesting. And finally, Rahul, if you could, throw some light on the upcoming NFO of this particular index fund.
Yeah, so I think the NFO dates are April 8 to 22nd. Obviously, this is for an investor who wants to take exposure to manufacturing as a theme. As I mentioned, this is a theme which can last for a few years. So anyone who has a longer term horizon, I would recommend this for that kind of an investor who has a longer term horizon of at least 2 to 3 years, if not more. And also, in terms of being different, I think the only thing I would repeat at the cost of sounding repetitive is that it provides a good mix of market capitalization, and it also provides a good variety of sectors within manufacturing to capture most of the potential and most of the growth opportunities which we just discussed.
Excellent. Thank you, Rahul. Thank you for taking out time for this discussion, and all the best for the NFO.
Thank you, Milan. Thank you. It was good talking to you. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.